Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So it seems that Fed has frightened the investors significantly stronger than it was seemed initially. Although this is still the subject that we need to investigate because, as I said yesterday, that expectations on the rate hike in 2023 already was on the market. And the euro-dollar futures also showed before the Fed statement that change should happen in 2023. So this was not absolutely new information. Maybe just official announcement has made the impact. But with this performance that we see currently, it seems that indeed something serious is going on there in the minds of the investors, and the sentiment significantly changes. So currently market stands actually at the edge because slightly downside continuation could change the long-term trends on the weekly chart, on the monthly as well. So this, in fact, this action that we see is mostly the subject for high time frame analysis for the weekly report that we definitely do in the weekend. So, and this is a bit curious that we have strong action, but actually nothing to talk about on the intraday charts because we have no patterns. By far, action just has hit the support area that we have specified recently, so you can see market dropped right to the 618 level and stands a strong level sold. So for financial markets, this is a bit not typical. So commodities could stand in oversold, overbought areas for a considerable period of time, but for financial markets, they are usually more sensitive to oversold conditions, overbought conditions, and shows the pullback. So for instance, this is something of that sort. As we can see here, it also was approximately the same penetration of the oversold area, and you can see that reaction has followed. So here's also market could, for instance, show the bounce. I do not know. As I said yesterday, we have to now keep an eye on the lower time frame as well. So and make a bet on the pullback only if we will get clear bullish reversal patterns on the intraday charts. Buying it's blindly just because market stands at the major support and daily oversold, this is really not a good idea. But since market just has hit this area, today is Friday, hardly we'll get today the good chance for taking the position. At the same time, although market yesterday has ignored the oversold and dropped lower, but we are dealing with the probabilities, and from the probability point of view, it might happen this time, this type of action. You can see touch of the oversold and pullback, touch of oversold and pullback. It was able that here could happen the same, and that's why from the technical point of view this is not a good point for taking the short position. Currently I could say the same because here we also have the support additionally to the oversold area. In fact, on the daily chart here we have the Jod Napoli bullish stretch pattern. It's a combination of the oversold with the fib level. That suggests some pullback. Most probable that if pullback will start, it could reach hardly it exceeds the 2050 areas broken confidence. Market has the habit when it breaks the confidence areas without any respect, as we have this time. So at some moment later, when it hits some support, it shows the pullback and retesting the same area from the opposite direction. It happens very often. So that's supposedly the potential target that market could reach if retracement still will happen. At the same time, we could keep an eye on a few patterns that we initially discussed. So if you remember, we talked about the hand and shoulders pattern. The market currently stands somewhere around the point where a potential right arm might be formed. But as you can see, as you understand that in the current new environment, it absolutely doesn't agree with the idea of the reversal, the bullish reversal on the daily chart. And technically, this acceleration on the slope of the right arm, where the bull should control the market, this is a very bad sign. And that most probable that this pattern probably will fail. And at at some moment we will see the taking out of the 117 area, because if market fails for the head and shoulders, this is almost the same as the drop below the head a bit later. So almost every head and shoulders that fails usually leads to drop below the head. This is what things that we need to keep an eye on. Another negative moment here is that take a look at our longer term picture that we discussed in the weekly report as well. You can see market has broken through this historical support resistance line. So now it's breaking it down. It means that it turns to another trading range that stands right now between 115.80 approximately in this trading range, dropping downside, and that significantly diminishes the chances on the upward continuation on the higher time frames. So maybe it even will be the preparation for the major reversal that we're watching for, as we discussed in the weekly report with our global economy cycles. That's what we have on the daily. On the 4-hour time frame chart, well guys, not many things to talk about. Here we have only minor ABCD extension, because all other extensions already have been reached. If we'll take a look at this, I don't really very like this extension because of this anemic BC legs, very small. But that actually the only extension that is still alive and then has potential target. It stands 1865. With this ABC top XOP right here. Any other extensions already has been completed. So in the case of some pullback here, first level that market could reach in 1985. This is also previous lows. You can see that our hand shoulders has not been formed, as market just collapsed on Friday without any attempt to show the pullback. Very minor candle has been formed here. With more extension, it might be the 2040 area could be retested, and that is actually stands around the previous broken confidence area. So theoretically, if it will be kind of the ABCD pattern to the upside, that's the potential target that market could reach. That's actually all that we have currently on the euro currency. So here we do not have any patterns. If you will drop your time frame to the hourly chart, currently here I also do not see something really special. So no clear patterns. So we have some hint maybe on the double repo buy, but in the current environment I think that we need something more serious for position taking. And I think that investors today hardly will be active just because it was really stunning information in this week. And they just waiting for the end of the week, and will start to think about the overall environment that stands on the market within the weekend. So some decision making, some new view on the markets. We should wait on the next week probably.